Hi everyone, welcome to our YouTube channel. We've got Assad with us, and it is a topic we've covered before, but we like to reaffirm some of the topics because renewal of mortgages is probably, if your mortgage is due for renewal, it can be a bit shaky if it's coming
That's
up.
a big topic. Yeah, that's a hot
It's a
topic
big
nowadays.
topic, you're right, Assad. So just take us through what can happen or what you maybe can do to make it a bit more less painful, Assad.
Absolutely. So, for anybody who did sign up for a mortgage in the past few years, you might have noticed that interest rates are a lot higher than what your current rate is. And you may be getting anxious as to what's going to happen when your mortgage comes up for renewal. There's a lot of mortgages coming up for renewal this year and a lot of mortgages coming up for renewal next year as well. And those are all the people who have good rates. Now, there are a couple of things that will happen, and that is certain. Upon renewal, your rate will be higher than the rate that you have right now, and there's no two ways about it. There's nothing that anybody can actually do about it because that is what the market rates are. And every lender will lend out a new term at what the current market rate is. Some higher, some lower, but more or less the same thing. Now, I know that's getting everybody anxious, but what can you do about it? We're going to go over some of those tips for that. The
Yeah.
first thing you can do is always discuss with your lender to increase the amortization period. Now, the amortization period is the length of the entire loan itself, not just the term that you have, which is a 5 year term, 3 year term, 2 year term, or anything like that. That is the entire loan period that you have for your mortgage. If you've had your mortgage for 5 years, you can extend that back up again to another 25 years, or if some lenders will allow up to 30 years. Now, by extending that amortization period, what that effectively does is it breaks up your remaining mortgage loan into a longer period of time, thus decreasing your mortgage payments that you would be paying either on a bi-weekly, weekly, or monthly basis. So that is some sort of relief to counter those high mortgage payments that you will be taking on once your mortgage comes up for renewal. Another thing that you can do is if you have some lump sum cash sitting around, or if you could get some cash from any means, then I would suggest putting a lump sum towards your principal mortgage balance. What that does is it pays down the principal balance of your mortgage, thus having less to pay back and less to go in towards a mortgage payment. And if you do a combination of both, that's best because now you've also paid down your principal and also extended that principal into a longer period for you to pay back. So those are just some things that you can do. Another thing that you could do is shop around to see what other lenders are providing. I know it's good to stay loyal to your lender since they've been giving you your loan and they had you approved in the first place. But if you're really conscious about what rate you have and how much you can save on your mortgage payments, shop around. Someone may give you something better, but also look at the pros and cons to it. Is it worth going to another lender, paying another appraisal fee and a discharge fee to your current mortgage provider to go through an entire mortgage payment mortgage application process to save maybe 5 points or 0.05, zero 0.1 on a mortgage payment? Because that is not going to make too much of a difference when it comes to your monthly mortgage payment. It might put a dent or a slight dent in the long term, but you have to take a look to see whether it is something that is feasible for you, something that you really want to go through to save a little bit on a percentage. If it's a great percentage change, such as 0.5% or a 0.25%, then sure, entertain it, take a look at it. But small points don't really make too much of a difference for someone to go through the entire hassle and pay some extra fees in order to get into a new mortgage. But that's another option that you can do to discover if you can decrease that mortgage payment. All in all, those are 3 steps that anybody can take. And I would highly suggest people take a look at it if they do not want to take on the high mortgage payments that they will be getting upon renewal. But these are some tips that you can discover and explore upon your mortgage renewal.
So your amortization, then you can put it up, but you can also down the road, if things get better, pay it down again. You can change it. It's not actually set in stone that's the length of the amortization. Am I correct?
Absolutely, you could. But then again, it all depends lender to lender. Some lenders will allow both, vice versa, and some lenders, once you fix it, right? But
Yeah.
it's always good to have that discussion with your lender to see what the possibilities are. At BMO, it definitely is a possibility. So we can always help you out. You can always reach out to your mortgage specialist. You can reach out to me or reach out to the branch, because ultimately this is a branch operation where the branch will have them done for you.
Good. Okay. All right, Sad. That's good. You've explained that to us, and I'm glad we've covered it. So we'll put that on our YouTube channel, and we'll talk to you this time next week. Thanks, Assad. Have a good week.
Take care, sir.
Cheers, buddy. Bye bye. Assad Naeem from the Bank of Montreal. His details are coming up. Thank you for watching our video. We hope you enjoyed it. Please subscribe to be notified of new ones.